This is No Lazy Money with Nick and Jim from Peak Wealth Management. Real people, real money, real talk. And your host, Ryan Ermanni.
Nick Hopwood and Jim Pilat from Peak Wealth Management in Plymouth. These two fine gentlemen are going to help make your money work for you. We do not sugarcoat it. We do not hide it. And we sure don't let our money sit around and do nothing. Real people, real money, real talk, zero laziness allowed. And that's what this show will be about. That will air the first Wednesday of every month from 7 to 8 p.m. right here on 760 WJR. For more information on Nick and Jim, we invite you to go to peakwm.com. That is the website to Peak Wealth Management, and we invite you to stick around. We've got a great show for you coming up next here. It's No Lazy Money with Nick and Jim on 760 WJR. 760 WJR, No Lazy Money with Nick and Jim coming at you. And we want to introduce these two fine gentlemen. The president and founder of Peak Wealth Management, Nick Hopwood, is with us. And the vice president, Jim Pilat, is with us as well. Gentlemen, thanks so much for being here. This is going to be a great show. I'm really looking forward to it. And education is such a big part of this. Welcome in.
Ryan, it's great to be here on 760 WJR.
Look at the energy, buddy. Way to go, Nick. Come on, Jim.
I'm not sure I can match it, but I'm also excited to be here.
Great stuff. Well, all right. Well, talk to me about No Lazy Money. I think the title of this show kind of describes what this show is going to be about. Where did you come up with it, and what does it mean?
Well, Ryan, for me, No Lazy Money, the first thing I think about is your money in the bank, probably earning nothing, right? What are the rates? Like 0.01% money in the bank. Ryan, you're going to work every day. I know you're working hard at two different places, right?
Yes.
You're all day grinding, and your money is laying on the couch watching Netflix while you're working. It's lazy.
Netflix and chill. That's what that money's been doing.
That's what they say.
Right. So how do we turn that around? What are we doing to turn that around? I mean, when you look at the bank rates and everything like that, how are we making our money work for us?
And Jim, what's your money market rate?
Money markets are paying close to 3 3/4 to 4%. So that's a really good alternative for money that's sitting in a bank earning 0.0 whatever.
And for a lot of people, they want to start making their money work for them. They don't really know where to start. And maybe there's a stigma associated with also not knowing where to start and getting that education. And that's what part of this show is going to be about as well. Education, education, education.
Absolutely. We provide education and guidance to inspire you to make great decisions so you can retire with peak confidence. And one of the first things you can do is make sure your bank rates are earning, like Jim said, 3.75, maybe 4%. Maybe it's a high-yield savings account at a .com bank, or maybe it's a Schwab brokerage account where you purchase the money market. Other broker dealers as well offer similar products. But that's the first thing I think of are these bank rates. The second thing I think of are your taxes and your tax brackets. And so when we see a lot of retirees right now who are in the 12% bracket or even the 0% bracket, not taking advantage of things like Roth conversions.
Yeah, it's so easy for people to just waste really good opportunity by not maximizing the opportunities that Nick's mentioning. If you're in a low bracket and the only thing that you have income-wise is Social Security, you could have a really good opportunity to do some Roth conversions, potentially even in the 0% tax bracket, and even all the way up into the 12. So a lot of working individuals who put away a lot of pre-tax money did so at 22, 24%, and now have a chance to convert or get money out in the 0 or the 12. That's a home run. You got to take advantage of it.
It's not that it's costing you, but it's that opportunity cost where you could have this great advantage.
The knowledge of taxes or the tax brackets or how to really work, some of the tax benefits as well can really mean such a significant part of one's financial picture, can it not?
taxes and tax planning is the hottest area in financial planning. You know, when I broke into the business 25 years ago after my econ degree at Michigan,
Go blue, baby.
no one was talking about tax planning. It was always like, no, go talk to your CPA.
Yeah.
But now we have the tools, the education, the software to show you what opportunities you could be taking advantage of. Not just the Roth conversions, but hey, is it pre-tax or Roth 401k? Is it a backdoor Roth? What can your HSA do for you? And Jim, we see a lot of people that are not taking advantage of these things in the tax planning area.
Yeah, absolutely. It's a real missed opportunity for a lot of people, and I think that's where a lot of thought needs to go into where I'm not just where I'm saving, but am I saving to the right accounts?
You know, it's interesting that you said too, Nick, like, you know, not understanding the tax brackets and some of the ways that taxes can work to your advantage, or knowledge of the tax brackets can work to your advantage. It really could be a huge cost savings for a family, a retiree, somebody, you know, that's looking to retire perhaps in the next 10 years. Really understanding, gaining that knowledge can really go a long way into preparing for your future.
Yeah, in the next 5 years, that's what we call the retirement red zone. It's like when Michigan gets into the 20-yard, you know, in the red zone.
Well, they haven't scored, but last week,
no touchdowns.
Nick, I mean, come on.
Yeah, you can't put up 9 points against Ohio State and expect to win.
Similarly, you can't let the government take advantage of your tax dollar, your hard-earned money, and not get that money into the end zone and make more.
Yeah, I thought we were talking football, but you're going back. You're throwing it back. But yeah, Jim said the right places, okay? So also the investments that we do have, do we have the right asset allocation in the right accounts? Let's think about some people that had cash or conservative investments in their Roth IRA.
Yeah, that's something that we see from time to time, and it's super frustrating for us because, you know, Roth, we love Roth, and we love Roth so much because all the earnings are tax-free forever. You'd be amazed at how many times we bring in a new client and their money transfers in on the Roth, and it's all invested in cash. Like they made the contribution, but they never put it to work.
Wow.
Either that or they know they're conservative and they want to leave it in, you know, bonds or something, and that's a real problematic. Because the best opportunity for a Roth is to grow it as much as you can. So that's typically the account that you want to be as aggressive as you are comfortable being.
Think of the Roth like as the Ferrari or Lamborghini, where like we can just have the high octane, right? The Corvette. And then, you know, people have got like the minivan in the Roth IRA. It just doesn't make sense. We want to take advantage of that, like Jim said.
We are talking to Nick Hopwood and Jim Pilat. This is No Lazy Money. Our friends from Peak Wealth Management are here. For more information, peakwm.com. Jim, you're talking about people being conservative and maybe just having their money just sit in cash or what have you. If you go by history, you are cheating yourself out of free money by not putting your hard-earned cash into a money market or something that would gain, a much higher percentage than just sitting there in a bank somewhere. I mean, conservative, I understand, but downright silly and neglectful is not a great plan either. Yeah,
There's so much money that's been lost just due to fear. People are afraid. They don't want to see it go down. They heard stories of, you know, grandpa, grandma lost all their money back in the day, right? Or in the tech bubble burst and they lost it all. The only way you lose it all is if you sell at the worst time and you get out.
Right.
Because the market, is hitting all-time highs, or it has within the last, few weeks. So,
but Nick, that's the point, right? I mean, you're over time, history has suggested, if you're a student of history at all, you take any 10-year snapshot, as far as the market is concerned, even in the Great Depression, a 10-year snapshot, and you're still up.
Yeah, there's been a few 10-year periods where it's been flat, but it's very far and few between. In the last 15 years has been quite remarkable.
Yeah.
I think if you looked at 15 years, it's about 14% annual rate of return. But the 10 years before that, 99 to 09, right, that was a flat decade. So it does happen. But going back to your red zone analogy, okay, when you're thinking about retirement or if you're already in retirement, right, we have to make sure that we're on the right path. Whatever the goal happens to be, we have to make sure that we're on the right track. And so a lot of these people, they know that they're saving money. They're moving in the right direction. But the question is, are they doing enough?
Yeah.
So meeting with your CFP, a team like Jim and I and Preston back at the office, right? We're going to put together a plan to make sure everything that you're doing reaches those goals. Because it's not enough just to contribute. We have to make sure we're contributing enough in the right places.
And people staying on top of it is a big part of that, too. I mean, there's so many people that will put their head in the sand and not really know what their money's doing for them, not really know what's in their account, not knowing what questions to ask. And that's where you guys come in, right?
Every time we meet, right, Jim?
Absolutely.
The idea is that people are coming to us for investments, but really they're coming to us for the financial planning work, okay? The investments, it's like 1A and 1B, okay? But we lead with the planning. Every time we meet, we have to make sure that we're on track to reach these goals. And if we're not, what are we going to change to get there? And so it's a stretch to talk about lazy money and whether or not we know we're on track. But if you don't know you're on track, you're simply sitting back, letting Netflix wash over you.
Can't do that. But we invite everybody to sit tight. Don't go anywhere. We've got a full hour ahead. This is No Lazy Money with Nick Hopwood and Jim Pilat, our friends from Peak Wealth Management in Plymouth. For more on them, peakwm.com. Don't go anywhere. More of No Lazy Money here on 760 WJR.
You're listening to No Lazy Money with Nick and Jim from Peak Wealth Management. Real people, real money, real talk. Once again, here's your host, Ryan Ermanni.
Nick Hopwood, Jim Pilat, Peak Wealth Management. For more information, peakwm.com/WJR. And Nick, talk to me, when people go to that website, peakwm.com/WJR, they get something for free.
Yeah, they can learn about us and they can fill out the web form and they'll get a free Social Security analysis.
That's pretty great stuff. And look, anytime somebody is trusting another person, another company with their hard-earned money, they want to get to know you, but they want to know why you do what you do. What is your why? How do you get that? And I know that's been a big theme for you.
It is, and you're right. Trust is the number one thing when it comes to talking about my money, my goals, and my plan. Simon Sinek wrote a book back in 2009 called Start With Why, and it really made us think, what is our why, right? Because people don't buy what you do, they buy why you do it, and it comes down to that trust.
And it means something to you, Jim. I mean, you know, when you go to work every day, it means something to you about the past, why you do it, about where you want to go. Can you talk to me about your why? Why do you do this?
Yeah, for sure, Ryan. You know, I guess I'll start kind of my journey. You know, I was graduated college in the late 90s and really loved doing this stuff. My dad and I used to talk about all the time, stocks and investments and mutual funds. You know, he'd have CNBC on TV all the time, and he'd talk to me about saving my lawn mowing money into investments, not just leaving it in the bank. So I just kind of always had a real interest in it. So I graduated college and decided this is probably what I want to do. So I went and walked into my local Dean Witter office, who's not even around anymore. You know, they've been gobbled up a few times over now. But talked to a guy and says, hey, I think I want to do this for a living. You know, what do I have to do? And he's, you know, this gruff guy with a cigarette hanging out of his mouth saying, you're going to grab a phone book and you're going to start today and you're going to go to Z and you're going to sell as many, you know, stocks as you can. I hope you have rich relatives. And I was like, man, it's not exactly what I was thinking. You know, it didn't sound great. So I decided to not go that route, and actually kind of followed my dad into business and was in medical sales publishing for a long time. So I joined him in that, and he kind of showed me the ropes for about a year. And just about a year into that, we got some bad news that he was diagnosed with leukemia. And he fought that hard for 10 months and then ended up passing away. So here I was now, a young, you know, a 24-year-old kid, 25-year-old kid, thought I knew about stocks and mutual funds, and my dad and I used to talk about it a lot. But my mom, you know, at that point was 53 years old. She had a lot of questions. You know, did she need to go back to work? Can she stay in the house that she's living in? Does she have enough money? And I learned pretty quick that I wasn't capable of answering those questions, even though I knew why he bought that mutual fund or why we should sell that stock, So it caused us to step out and try to talk to some different companies. And, fortunately, I felt like I knew enough to see some landmines, and looking back at that experience where here we were, these vulnerable people who just lost my mom just lost her husband, getting answers from advisors that I thought that's a terrible idea. Like I just knew they were trying to put her in these annuities that were going to lock up her money, and she was never going to earn anything on them, and it was going to be there for 10 years. And she was young enough where this money still had to earn. So it just really got me thinking that, man, that's not how I would do this business. I would want to take care of those people who are vulnerable and who really need good advice.
Being that vulnerable yourself, being in that situation, how much does that help you with every single client that you have, knowing that you had those questions too?
Yeah, I think it just gives me a good perspective, when you see people coming in that just are searching for answers and the right answer for them. It just takes me back to that place where we were, where I didn't know the right answers and I just wanted somebody that I could trust. And it makes it easy for me to do that, to be that person that this is advice that's in your best interest. Fiduciary is a word that is thrown around in this business a lot. And that what that meaning of that word is that you put your client's interest ahead of your own. And that's what we do. And it's easy to do that when I think back to the experience that we had.
That word fiduciary, putting your clients' needs and wishes before your own. Talk to me about, I don't want to say how rare it is, but how important is it for an advisor to have that mindset going in, working with a client?
Yeah, I think, you can't assume that it's that every advisor has your best interest in mind, I guess I'll say. I've had other advisors and talked to different people in the business who say, oh, man, do you know what the commissions are on that thing?
Yeah.
And that's their motivation for why they sell certain things. And that always just, struck me as, it takes me back, I guess, to that place where I felt like we were, where that advisor's thinking about how much commission he can make off my mom rather than what does she really need to do to have a successful, future financially.
You're listening to No Lazy Money here on 760 WJR. Nick Hopwood, Jim Pilat, Peak Wealth Management. Again, the website, peakwm.com/WJR. Jim, let me stick with you for a minute because something that you said just about your dad growing up, and you guys used to talk about stocks and bonds and annuities and all of these things, and investing your lawnmower, lawn cutting money. How important do you think it is for parents to talk to their kids? I kind of remember growing up and my parents always saying, save, save, save. I wish they would have said, invest, invest, invest. How much of that conversation do you think we need to have with our kids moving forward? And maybe if you're an adult out there, just take some of that advice as well.
Yeah, I think it's a really important conversation. And I think part of the reason when I was young that my dad and I had such good conversation around it is because I saw that, like the compounding, right? And I saw that if I put this money in the right place, my $100 became worth, $150 or $200, and I didn't even have to do anything about it.
Right.
So I've been a huge believer all along in starting as early as you can. So, I have 3 kids of my own, and, I got them brokerage accounts because I wanted them to see how it works, and I wanted to show them, how and why we would put money in there, teach them the concepts of saving, spending, and giving. I think those are 3 important things that people need to learn early on. And you take it for granted. A lot of people don't know that. A lot of people that we talk to that come into our office, it's been clear and they're upfront about it. Like they weren't taught these things when they were young, so they feel like they're playing catch up.
We talk about so many young people, but conversely, it's never too late to start either. There might be somebody listening to this right now in their late 40s, heck, maybe even late 50s. And they're like, I'm just a few years away from retirement, perhaps, or I'll never be able to retire. I mean, there's so many different things that you could start. It is never too late to start somewhere, right?
Yeah. While I'm a huge believer in starting as early as you can, One of my favorite sayings is, the best time to start was 20 years ago. The second best time is today.
Yeah.
And you're right. It's not continuing neglect because you've neglected for the last 10 years. It's what can I do today that will put myself in the best position, financially in the future.
And that's what this show is and will be about. The first Wednesday of every month, No Lazy Money with Nick Hopwood and Jim Pilat from Peak Wealth Management. Again, the website is peakwm.com/WJR. And there are some free consultations and things that go along with that if you visit that website, peakwm.com/WJR. We are going to come right back and we'll talk to Nick Hopwood about his why he does this. And you're going to learn more about him because, look, trust is everything when you're talking about helping somebody, having somebody help you with your money into retirement, growing for you, working for you. Because sitting in a bank, it's not getting done. That's not helping you. It's not. You cannot outsave your way to retirement. It doesn't happen. So that's why we are here to help you gain some education and learn more. It's No Lazy Money here on 760 WJR. No Lazy Money here on 760 WJR with Nick and Jim. Nick Hopwood, Jim Pilat, Peak Wealth Management. Again, the website, peakwm.com/WJR. We invite you to go check that website out. We were just talking to Jim Pilat, the Vice President of Peak Wealth Management, about his why. Let's bring in Nick Hopwood now, the president and founder of Peak Wealth Management. Nick, I want to talk about your why. This is something that you've always wanted to do as well. Talk to me about why you do what you do.
Ryan, when I was a kid, I was a bag boy at Goff's grocery store in East Lansing. I was a bus boy at Chi-Chi's. I was making like $10 an hour cash
God,
back
I love
in 95.
Chi-Chi's, man. Oh, my gosh.
They're bringing it back in Minnesota.
I heard.
So I'm saving money. I got money in the bank, and I look at the bank statement, and I see I earned 1 penny of interest this month. So I asked my mom, what can I do? She actually schedules an appointment with me to meet with her financial advisor, who happens to be my girlfriend's dad.
Get out of here.
Comes on over. We sit at the kitchen table. I fill out my American Funds paperwork. My mom signs as my guardian, as my custodian. And there it is. I got my first investment going, and I got my paper statements coming in. I don't have online access. Only the rich kids had AOL back then. So my first investment experience, and in the 90s, it was booming, right? So it's growing. Simultaneously, I'm watching my dad struggle with money, complaining about the bills, not contributing to the 401, not contributing to any other investment account, complaining about the bills all the time, right? And I'm thinking, he makes a good salary. He worked at Cumulus back in the day, before it was Cumulus, actually, radio station in Lansing. It's like, what's going on here? Why is my mom, who makes less than my dad, not complaining about money and teaching me good lessons? My dad's here struggling and complaining. So as I learned more about money, I realized my why as I went to go work as an intern at American Express Financial Advisors, seeing how the advisors can make a difference for people. I'm sitting there saying, I think I figured out what I want to do. I love the investing, and the planning is so rewarding, and I can help people not be like my dad.
That's interesting that you say that, Nick, because you talk about your mom who made less than your dad, but she was in a much better financial mindset and picture moving forward. It's not about how much you make. It's about how smart you are with your money. Is it not that?
It's absolutely true. And it all often starts with spending, right?
Yeah.
What are your expenses? And most people have no idea what they're spending. But it was so frustrating because my dad had to work till he was 72, and then he sadly passed away at 76. So he had a very short retirement. And what I want for you, Ryan, and for all the listeners, is that they can have a retirement on their terms and make it a 25-year retirement, not just 4 years. So my why is helping you not be like my dad.
And, when you have a way that you grew up as well, when you've seen it firsthand, of the right way and perhaps a way that you would want to avoid, I think that leaves an impact on somebody, and it looks like it made an impact on you.
There's no question. There's a lot of people that come to us and they bring all their statements in, or we prefer they upload it in the secure link in advance. But we're looking at everything and we're thinking, if they keep doing what they're doing, they're not going to make it, right? They have to make changes, whether it's to save more into the 401, more into the Roth IRA, more to the mortgage, or just generally less spending, or work longer, right? There's only certain number of levers that you can pull. And so this is what the planning is all about, is making sure that they're on the right track to reach their goal.
And, that's an interesting part, too. You bring up spending, because spending is look, we could all look ourselves in the mirror and say, we want to cut out X, Y, and Z. We can, whatever you want to cut out, but you've got to look at it. You can't bury your head in the sand and say, well, it'll work itself out. No, it won't, if you don't really take charge of what your own financial picture is in terms of spending, at least.
You hit the nail on the head with 2 points there. Jim, what's it called? Like some sort of delusional thing about money? People just want to believe that everything's going to be okay, and they're not addressing the facts head on. So if you just have this money delusionment, right, or disillusionment, then you're never addressing it. But really what you have to do is not just say, hey, the latte factor, I got to cut out Starbucks. Look, it helps a little bit, okay, but it's not going to be the end all. You have to simply start by understanding what your needs are. And what I mean by that is, how much am I spending per month? You don't have to make a big budget out of it, but I just want to understand how much you're spending. Because if you're spending $10,000 per month right now, that's what we have to plan on spending in the future, because nobody wants to retire to a lesser lifestyle.
No doubt. And, among the things that you were talking about that struck me, too, is the fact that your mom had a conversation with you growing up about money. I feel like money sometimes is such a taboo topic to talk about. Like, maybe parents don't want to talk to their kids about it. But nonetheless, it is that conversation and those continuous conversations about money that you had with your mom that helped you, I think, become what you are today, in helping all of these people kind of be on the right track financially because of conversations that were had, not trying to shield you or guide you away or just, not talk about it. I think that communication piece alone is such an important way to move forward.
It is, and we actually invested in a app called Dinner Table, where you're trying to promote conversations like this with your kids.
That's fantastic.
Yeah, so the app is all about reinforcing and teaching the kids good values when it comes to work ethic and money. So I have an 8-year-old, right? My daughter, she's out raking the leaves, right? And we reward that, right? And then she says, wow, she's now making a connection with a little bit of money and the hard work. And now she says, hey, Dad, can I go rake the leaves for our neighbors? And I'm like, well, you better go ask him first, right? But the wheels are turning inside her head.
And then set a price.
Yes, at 8 years old. Right. It's incredible how it works, and it reinforces. So we talk about this all the time. We did it. In fact, we have a YouTube video up there, youtube.com/peakwealthmgmt. Search out Dinner Table, you'll see it.
Say that website one more time, because it...
youtube.com/peakwealthmgmt.
There you go. And you are listening to No Lazy Money with Nick and Jim here on 760 WJR. It's a monthly show, going to air the first Wednesday of every month from 7 to 8 p.m. here on WJR. PeakWM.com. I know I'm throwing a lot of websites at you, but this is all great information. PeakWM.com/WJR for more information on this. And one more thing about this, Nick, in terms of your why. When you see an older client call you for the first time and say, I need help, I'd like to look at my financial picture, I'd like to examine when I'm going to be able to retire, if I'm going to be able to retire, how much of your dad do you see in perhaps that client?
I do see it, and there's no question that I'm reminded each time. And the one thing that I really put on my own shoulders here is to not just give the good advice, but inspire them to take action. Mm-hmm. We want to provide that education and guidance, but inspire them to go with it. It's one thing for us to say, hey, you need to increase this or increase that, but if they don't do it, what's the point?
That's a great point. That is a great point, Nick, because in any relationship, and when you are investing money with an advisor or what have you, it is a relationship. Here's guidance. Here's what we would do if we were, but you've got to go out there and do it as well. It's not a one-way street here.
Not at all. Not at all. And so there's so many times when we see people, maybe another advisor was giving good advice and they didn't take it, right? But then they end up with us and they're unhappy with that advisor for whatever reason. And then we offer the same advice and they're like, okay, well now I hear it again. Right. So I got to actually do it. But it's very common for people to nod along with you and say, yes, this makes sense. But it's just much more difficult to take the action.
And also, when you get in a relationship where you have a partnership, a trust with your advisors, I mean, I think that speaks to, action as well.
And accountability.
Accountability, yeah. That's the word I'm looking for. Look at you, man. Thanks. I appreciate it. I was looking for a word there, and you gave it to me. Nick Hopwood, Jim Pilat, Peak Wealth Management, peakwm.com/WJR. We invite you to check out that website. No lazy money here on 760 WJR. We're coming right back with more, including will the Fed cut rates in December? That is coming up. We'll have that for you. Forecast moving forward. 760 WJR.
You're listening to No Lazy Money with Nick and Jim from Peak Wealth Management. Real people, real money, real talk. Once again, here's your host, Ryan Ermanni.
Final segment of the show, 760 WJR, No Lazy Money with Nick and Jim. My good friends Nick Hopwood, Jim Pilat, Peak Wealth Management, peakwm.com/WJR is the website for more information. Gentlemen, let me start with this. December rate cuts, Fed meeting. We talk about this economy like crazy, and it feels like there's, I don't even know, like 5 different economies happening out there with spending over $14 billion on Cyber Monday, over $11 billion on Black Friday, but nobody's got any money, but everybody's spending it. I can't keep up with this economy and the ways we're looking at it. But do you anticipate a December rate cut here by the Fed?
I think so. The market's pricing in 87% probability of a rate cut, and it's based on some cooling inflation data. I know no one wants to hear that prices are cooling off, but the big jump is already baked in. So at 2.6 inflation, it gives the Fed some leeway to cut.
Okay. So
the other thing I would say on this economic data that you're talking about, the hard data, that data is actually pretty good, like GDP 4% kind of a thing. It's all of the surveys, all of the soft data that's coming in rather weak. But if you had to pick one or the other, you'd go with the hard data.
No doubt about it. Like the numbers feel good, right? I mean, inflation and GDP and spending and all this stuff. But the individual consumer's feeling about the economy as well, when they go to the grocery store, when they go to the gas station, gas, by the way, averaging $3 a gallon for the first time in several years. Many states are under $3, but nonetheless, people feel how they feel, and you can't tell them how they feel at the checkout counter, right?
I think one of the biggest things that when we talk about feeling is this health insurance crisis that we have.
No doubt. And let's focus on that, because Obamacare premiums are expected to just skyrocket.
They have.
Yeah.
It's a 25% increase across the board. Just got an email this morning from a client who had their premium go up to $3,250 per month, and this is age 62, age 63, a couple, just 2 people,
$3,250 every month.
That's right. So what they're going to do, and now they were getting an Obamacare subsidy, and they were only paying $500 of it because the government was picking up the rest. Mind you, they have millions of dollars in their portfolio, but the feds are picking up the health insurance premiums for the last 5 years.
See, that's not right either. This is a totally broken system.
Oh, it's completely broken. And it's forcing people, to go without insurance, it's forcing people to raise their deductible to $15,000 per year. There's other Christian-based organizations that people are turning to, which, I like those options actually, but this is not general advice. But it's a real crisis, and there's no end in sight.
Yeah, the only thing I'll add to that is, we see healthcare premiums go up year after year. That's not anything new. 25% is a pretty big increase, but coupling that together with the subsidies going away is really what's going to create an issue for people.
Just on the surface, with somebody that has millions of dollars in their portfolio, they probably shouldn't be getting breaks from the federal government either when it comes to this.
Yeah, they shouldn't be, but if it were me, I would take the break, right?
Gosh, yeah, you kidding me?
And I have to offer the advice to take the break.
100%. I'd take them all day and twice on Sunday.
But you go back to Congress, and why are they doing this? I don't know, right? I don't know why they would not design it for people that are actually really in need rather than, someone with a lot of money.
It just goes to show you, though, too, Nick, like once you give somebody something, it's real hard to take that away. When you go from paying $500 a month to $3,250 a month, that is a significant increase, no matter how much money you have. But I guess we can go into the cost of things as it is. But, for the what about the retiree, perhaps? Let's just make a fictional scenario up. The retiree that's living on Social Security, they will have their premiums go up all over the place. How do you jive with somebody just living on Social Security income and having all these premiums go up? That's not right.
The key to remember is that it's pre-Medicare, right?
Yeah.
So pre-age 65. So when we're in the red zone and we're talking about planning, you have to really plan to have an early retirement. You have to have a huge HSA or a large portfolio or a side hustle of some sort in order to pay these premiums, because really, Jim, the new retirement age, the new normal is 65.
Yeah, people always used to default to 62 because they knew they could get Social Security at age 62. But as we're seeing and as we're talking about right now, healthcare has become a major difference maker in that decision. So 65's kind of become the new 62 just based on when you become Medicare eligible.
I've talked to a few people over the last few years that, in the question of when to retire, one of the reasons why couple people that I've talked to have stayed working is for the health benefits, for health care. But that goes back to education too, doesn't it? You could be working against yourself in other areas, right? When it comes to tax brackets and tax purposes and all of those things too. Is health care the main reason or a good reason to stay working for some people? Fictional guy Larry, let's call him.
It could be, Ryan, because Larry could be just grinding to 65,
yeah,
right, and then hit the wall. But the new trend with retirement is actually not going 80 hours a week to age 65. It's finding like a semi-retirement, something going on maybe from 60 to 70. And instead of working 40 hours plus a week, it's maybe 30, maybe 20 hours a week. Maybe you have a certain skill set where you consult and have a high hourly rate. And the idea is that you can work longer, maybe for less,
yeah,
and be more happy.
No doubt about it.
I think it also goes back to something we talked about in the first segment, no lazy money. There's accounts that people do not maximize, and health savings accounts is a huge way to pre-plan for this, right? We know that healthcare is going to be an issue. If you want to retire early, we need to know in advance, how are we going to address that? Health savings can be a great fit for some people. Acting like a Roth IRA and a pre-tax contribution. It's the only triple tax-free account out there.
Triple tax-free.
Yeah.
Health savings accounts. I feel like that's newer. It's kind of a newer thing that people have really wondered, is this something I want to do versus the old PPO, employer-issued PPO?
Based on the premiums, Ryan, people are getting forced into high deductible plans, right? So to have an HSA, you have to have a high deductible plan. So by nature, now they're eligible because they're shifting their policy, and then they're realizing these costs are out of control. So they're trying to plan ahead into the future for medical costs, and we're getting the triple tax-free benefit. So boom, now it's the hottest thing around.
No doubt about it. All right, final thing here, gentlemen. It's Wednesday, December 3rd, right here, right now. A lot of people are going to be going out there buying Christmas gifts, spending money over the next month. What would you suggest to somebody who maybe has like a 16, 17, 18-year-old kid out there, or a niece or a nephew or a grandson, a granddaughter, whatever the case may be, in terms of a financial gift, maybe opening up an account for them, a money market account or something like that, paying into maybe a college savings account or something, as opposed to getting a thing, a gift that they will not remember a year from now?
I'll take it. Open a Schwab account.
Yeah.
Make you're the custodian for the child. Ask them what their top 5 favorite companies are. Maybe it's like Nike or Amazon or something. I did this for my kid. He chose Delta. He's like, I love Delta. Yeah. He's like, I don't like Spirit. I like Delta. So then we bought those stocks for
Smart
the children.
Kid, by the way.
So we bought that stock for the kids in that brokerage account.
That's a great idea, Jim.
Yeah, and the other thing, the account that you cannot start early enough is a Roth IRA. You have to meet certain criteria to open it, have employment income and things like that. But as soon as my kids turn 18, I've only had one there, but that's the first account I want to open for them because that money's going to grow tax-free forever.
That's fantastic. Jim Pilat, Nick Hopwood, Peak Wealth Management. This has been a great conversation. We cannot wait to get together again next month. Merry Christmas, Happy Holidays, Happy New Year. We'll see you in January, gentlemen.
Merry Christmas.
Merry
Thanks,
Christmas.
Ryan.
You got it. All right, everybody. For more from our friends Nick and Jim, Peak Wealth Management, peakwm.com/WJR. This is 760 WJR.